Volkswagen swung to a $1.9 billion third-quarter net loss and issued a full-year profit warning Wednesday, as the German carmaker's emissions cheating crisis continues. The quarterly loss compares with a net profit of 2.9 billion euros a year earlier.
Volkswagen's results were largely in line with market expectations, and there were no additional surprises in the announcement today, which is why the shares have been doing better than people had expected.
It was caused largely by the charge against earnings that VW has taken to pay for a global recall of up to 11 million cars that contain illegal software that dupe emissions tests.
In a way, the most important part of Volkswagen's announcement today isn't what was said, but what's still missing. The big question about how much the scandal is actually going to cost in the end. Volkswagen won't know that until the results are in from penalties from the Environmental Protection Agency in the U.S. and other regulatory agencies, and possible litigation from shareholders and customers.
However, the crisis had almost no impact on the company's operations. Group revenue, which excludes sales revenue from VW's joint ventures in China, rose by 5.3%.
The third quarter report also shows that Volkswagen's business is still quite robust. Sales are strong in Western Europe. They're having problems in China. They're having problems in emerging markets. But the diesel crisis hasn't actually hit yet. That could come over the next couple of quarters. So what next year will look like is still up in the air.
The emissions crisis emerged last month, and VW has admitted that it has deceived environmental authorities in the US and Europe for years.
We will uncover and disclose the full truth of what happened, and we will make sure that something like this never happens again.
The company is under criminal investigation in the US and Europe and could face billions in fines in compensation for shareholders and customers.